Namaste, viewers. Wishing you all a very happy new year. Welcome to ST Money's Morning News, your weekday business news channel. It's Wednesday morning, January 1, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. The stock market highlights from Tuesday, December 31, 2024. Benchmark indices Nifty and the Sensex showed a mixed trend on December 31, the final trading day of 2024. While Nifty clawed its way into the green, Sensex remained in the red. Benchmark equity indices, the BSE Sensex and the NSE Nifty 50, recovered smartly from the lows of the day. Nervousness lingered amid a rising dollar index and persistent FII selling as the year drew to a close. The BSE Sensex had tumbled to a low of 77,561, tracking losses in global peer. However, it erased losses and jumped to a high of 78,248 in intraday deals. The Sensex eventually ended at 78,139, down 0.1% or 109 points on the last trading day of the year 2024. Similarly, the NSE Nifty 50 index recovered from the day's low of 23,460 and surged to a high of 23,690, an intraday gain of 230 points. The Nifty 50 finally settled almost unchanged at 23,645. In the process, the BSE Sensex ended the calendar year 2024 with a solid gain of 8.17% or 8,809 points after having registered a summit at 85,978 during the year. The NSE Nifty 50 mopped up an 8.8% gain in 2024. The benchmark indices were up for the ninth straight calendar year, rising as much as 200% in this period. Back to Tuesday, BEL, Kotak Mahindra Bank, ONGC, Trent, and Coal India were the top gainers on the Nifty in the last trading session of the year. Major laggards included Adani Enterprises, TCS, Tech Mahindra, Infosys, and Shriram Finance. Among the broader indices, the Nifty Mid Cap ended flat at 21,127, while the small cap gained 0.6% at 17,744. With the end of 2024, the two have remained more resilient, falling just 5% in the last 3 months. Nifty, on the other hand, has lost almost 9% over the same duration. The broader market took center stage with the Nifty mid-cap and small-cap indices delivering impressive gains of over 20% each, showcasing the resilience and potential of smaller stocks. Sectorally, the NSE Nifty IT index slipped 1.5%. Nifty Realty Index was the other notable loser, followed by Nifty Bank, whereas the oil and gas index jumped up over 1%, and the PSU Bank, Pharma, and metal indices all advanced around 0.5% each. The IT index led the afternoon slide, tumbling over 1% as heavyweights, Infosys, TCS, and HCL Tech dragged it lower. The sector, heavily reliant on US revenue, struggled amid market jitters following the US Federal Reserve signal of fewer rate cuts in 2025 than anticipated. Realty stocks followed suit, with the index slipping 0.3%, weighed down by Lodha, Godrej Properties, and DLF. The Nifty Bank index also dipped 0.23% as private lenders HDFC Bank and ICICI Bank slipped. On the brighter side, Nifty Pharma emerged as a top performer, gaining almost 1%, with Sun Pharma, Lupin, Cipla, and Dr. Reddy's Laboratories leading the charge. Auto stocks recovered modestly, rising 0.4%, while oil and gas stocks added 1%. Among individual stocks, shares of shrimp farming companies, Avanti Feeds and Apex Frozen Foods, surged around 6% each on December 31 after domestic brokerage Incred Equities rolled out a strong growth outlook for the industry. RVNL shares were a bright spark, rising 8%, snapping a 9-session losing streak on the bourses. This comes after the railway stock was declared the lowest bidder for 2 projects. Shares of Easy Trip Planners tanked 10% after a block deal worth rupees 53 crores took place on the exchanges on December 31, with co-founder Nishit Pitti being the likely seller. In the primary markets, shares of Unimec, Aerospace, and Manufacturing made a stellar debut on the bourses on Tuesday, December 31, 2024, listing at rupees 1,491 per share, reflecting a premium of rupees 706 or 89.89% against the issue price of 785. The fear gauge, India VIX, which gauges the volatility, rose 3.5% at 14.47. In the US overnight, tech stocks once again led the decline, and Wall Street closed the year in negative territory. The Dow Jones Industrial Average on Tuesday fell 29 points to 42,544. The S&P 500 lost 25 points to 5,881, and the Nasdaq Composite lost 175 points to 19,310. Though Tuesday was a sell-off, the overall markets made stellar gains in 2024. For 2024, the Nasdaq surged 28.6%. The bellwether S&P 500 notched 23.3% gain, marking the index's best two-year run since 1997-98. The blue chip Dow posted a 12.9% advance for the year. The US markets are closed today on account of New Year, whereas Indian markets are open. Brent crude is $74.64 a barrel, gold is $77,000 rupees per 10 grams, and silver is rupees 87,280 per kilogram. Now for today's outlook for the Indian market. Overall, the Nifty is expected to remain within a broad range of 23,500 to 24,000 in the near term. Having bounced back from the lower range, further upside towards 24,000 levels is likely in the coming weeks. The crucial 200-day EMA is in the limelight again. There is a likelihood of an upward trend towards 23,900. However, to achieve this, the index must decisively clear the 23,700 hurdle, which coincides with the 200-day EMA. Until then, 23,500 expected to act as an immediate support, which is the November low, followed by 23,400, the 50-week EMA, as a crucial support level. Stocks to watch today: Kalpataru Projects, ITC, SJVN, Newgen Software, Utkarsh SFB, TVS Holdings, Sun Pharmaceuticals, Piramal Enterprises, LT Foods, Indostar Capital Finance, Hazur Multi Projects, Persistent Systems, Vishnu Prakash R. Punglia, Kirloskar Industries, Easy Trip Planners, AGS Transact Technologies, and Unimec Aerospace will be in focus on January 1 today. For 2025, experts remain optimistic about India's relative insulation from global shocks and its long-term growth trajectory. However, GDP growth is projected to now moderate to 6.3% in 2025 due to fiscal tightening and slower credit expansion stemming from Reserve Bank's macro-prudential measures. Still, it is the fastest growing economy in the world. Analysts anticipate rate cuts to commence in early 2025 with a cumulative reduction of 50 basis points by mid-year. Nonetheless, subdued retail growth is expected to persist even as interest rates ease. We are keeping our fingers crossed for a stellar 2025. That's it for today. I'll see you again tomorrow morning. In the meantime, please do subscribe, share, and like this video. Thank you. Happy investing, stay inspired, and remember, it is all about money.